Good evening and welcome to another episode of the Weekly Market Wrap. My name is Daniel Ang, and of course, today is May the 18th, 2025. Now, this past 2 weeks has been quite extraordinary. We have seen how the UK and US struck a preliminary deal on May the 8th, and that followed last weekend agreement between China and US on pulling back the tariff by 115% for both China and US export into each other markets. Market has reacted, and today we will be talking about what happened this past week. The mood on Wall Street has been very positive. However, towards the end of the week on Friday, before Wall Street closes, something else happened which may actually throw a spanner into the wheel. Okay, so without much ado, let's remind you that this presentation is not an offer to buy or sell any kind of securities, be it FX, CFDs, or any kind of margin financial products. And the trading of any kind of margin products to carry risk, do understand your own risk profile before you attempt to trade any of these products. And I'll be sharing with you my views on the various markets, and do understand that those are my views and has got nothing to do with the sponsor, which is IronFX. And I want to take this opportunity to acknowledge IronFX for sponsoring my events for the last few months, and they have been great for this webinar. Okay, and of course, the content of what I'm going to show you today has not been vetted by any regulatory body. With that out of the way, the first thing that came out over the weekend, the last weekend, I mean, is the tariff arrangement between US and China. Remember earlier on, I did mention going into last weekend on Saturday and Sunday, the US and China had their representative in Geneva, Switzerland, trying to hammer out some kind of agreement. Although it was not termed as a negotiation, and I suppose that was what it was, although expectation leading into the meeting itself was not very high. And lo and behold, on Sunday, last Sunday, they did actually announce some kind of preliminary agreement to bring down tariff on each other by 115%, which effectively means Chinese export into the US will be levied 30% tariff. Likewise, US export into China will be levied 10%, exactly what it was before Liberation Day. So that was a condition in which China has imposed before agreeing to meet a representative of the United States for a tariff talk. So it is now back to square one for the United States. And this arrangement is only good for 90 days. And within these 90 days, they have to come to a more firmer agreement before they can seal a deal. Whether or not that will be the case remains to be seen. So what will happen in the next 90 days is going to be uncertainty. And I suppose it gave US importer a chance to stock up on Chinese goods. So I think if the US companies is going to maximize the use of this 90 days pause is to ramp up their imports of Chinese goods just in case if there is no agreement beyond the 90 days truce. Okay, and it also gives the Chinese companies a chance to unload, okay, their inventory, which have been building up leading to Liberation Day on April the 2nd. So this has been good, and this has not really changed the needle a bit, okay? And certain countries are definitely not happy with this preliminary agreement between the two nations. Uh, India, for example, is very upset that the Chinese are getting a much better deal because the Indian has actually gone to the United States and actually proposed to drop all tariff on US imports into India. And now it seems that the Chinese are, by playing hardball, is able to get the United States to lower all the Liberation Day tariff. This is where we are before April the 2nd, as far as the Chinese is concerned. So there will be pushbacks, okay? And we heard over the last few days, India has actually announced that they are going to impose tariff on US imports into India, although they have a preliminary agreement, although nothing has been signed. Now, we have up to date, okay, at least two verbal agreement, one between the US and UK, and the other one is China against relative to the United States. Although both agreement has not been formal agreements. It's just commitment. Okay, so we will have to see for more details as the days goes by. Okay, and we do get a sense of urgency because come June next month, US will have to refinance a big chunk of their treasuries which are due for refinancing. And the amount that has been touted by a lot of reports go as high as $6.5 trillion, which need to be rolled over. So the United States now have a problem because over the last, since the announcement of the tariff on April the 2nd, US Treasury has been sold off, and that suggests that foreigners are definitely dumping the so-called safest assets in the world, which is the US Treasury. And that will be a problem going into June as the Treasury needs to refinance. One is that there is going to be a lack of buyers as far as foreign buyers are concerned. And the other thing is the yield has gone back up. Okay, and that will make the financing of these short-term treasuries even more expensive. And we knew last year the interest the United States spent on servicing their $36 trillion worth of debt is $1.33 trillion. Okay, so the United States is definitely not able to afford to pay the yield which is currently being quoted in a being shown in the 10 years treasury, which is closer to 4.5%. So it is very, very high. Okay. So we will see in the next few days and weeks, the urgency to actually bring down interest rates is going to be critical. And in the meantime, we have been seeing the dollar has been selling off since January the 20th, which is Donald Trump's inauguration term, okay, for the second term. So the dollar is down, yields are up, which is going to be a bad combination as far as the treasury is concerned when they try to renew or refinance the maturity of this short-term treasury from back in 2020. Okay. Now, every week, okay, for the last few months since the return of Donald Trump, he has been telling the Federal Reserve to cut rates, and he was again at it, okay, uh, telling the Federal Reserve to cut interest rates pronto, okay. So he is definitely getting the hit, whereby he feels that if the longer the Federal Reserve do not cut rates, it's going to be very detrimental to the refinancing of this treasury that I was mentioning. Okay, something like $6.5 trillion for June, and another perhaps nine, oh no, sorry, and another maybe close to $3 trillion come September, and that's only the U.S. national debt. There is going to be a mountains of corporate bonds that need to be refinanced towards the end of the year, also sometime around the third quarter or fourth quarter. Okay, so definitely interest rates, if it doesn't come down soon, it's not only going to negatively impact how the US is going to refinance their treasuries, it's going to impact how corporate bonds is going to be rolled over. So by and large, the game is on, and what they don't have now is time. Okay, that's why Donald Trump has been harping on getting the Federal Reserve to cut rates like yesterday. Okay, so he is definitely getting a little bit edgy right now as we move closer to June. Now, the other thing that has also happened this past week, Donald Trump has actually made a 3 days tour of the Middle East covering three nations. We have seen very high and very prompt reception, okay, by Saudi Arabia by rolling out the purple carpet, okay, and also dangling a $600 billion commitment to invest in the United States, all to please Donald Trump. And that definitely Trump has been very, very he's very cheerful, and he mentioned that he is making great progress in getting investment into the United States. Not only did he manage to secure $600 billion in commitment to invest in the United States, he also managed to get Qatar as well as the UAE to also to commit big ticket investments into United States. For the Qatar Air, it has committed to buy more than 120 Boeing's planes from Boeing, which has lost a big chunk of their order after China have rejected taking delivery of their Boeing planes. Okay, things may change now that the US and China has some kind of a verbal agreement, and maybe the delivery for Boeing planes into China may actually resume. But we will have to see, because right now there is no news on that front. So the deal that President Trump got for Boeing via Qatar's commitment to buy more than 120 Boeing planes definitely is a shot in the arm for Boeing. Okay, so it has been a great week for Donald Trump, and the market has reacted very positively on this news. First, it was the agreement between US and China in Geneva, and then this followed very swiftly by a very successful tour of the United States with the Middle East by President Trump. So market has received all this news very, very well. We see equity markets in the States has actually extended the rally, and that has also been detrimental to gold prices, because there has been a risk of no, sorry, there has been a mood to take on more risk. So we can see gold suffered as a result. To date, from the month high of $3,448.20 for COMEX gold, we saw that the price of gold has actually declined very sharply to the tune of $250 per ounce, representing 9.4% from the month high to the low this week on Thursday, when the market hit a price of $3,123.30 per ounce. So we have seen market has been reacting quite violently. Good for equities, bad for precious metals. Okay, so we also have updates on the proposed meeting between representatives of Ukraine and Russia in Istanbul, Turkey. Turns out it was not successful, although they have agreed on a prisoner exchange, but nothing beyond that, because both President Putin and Zelensky did not show up in Istanbul. Okay, so it wasn't a success, but at least they get a commitment to exchange 1,000 prisoner of war among themselves. So that may be a progress, so to say. Okay, it wasn't meant to be a the expectation wasn't very high going into the meeting. In fact, the Ukrainian delegates were late by 22 hours. So they left the Russian delegate waiting for them for almost one whole day before they actually show up. Okay, so it was definitely not something to look forward to. Okay. Now, on Thursday, the Fed chairman actually gave a speech. Again, there is no surprise here. He says basically he will still be watching the data, and he's going to be but he's actually very concerned on the policies. And what he is referring indirectly is the tariff policies impact on inflation in the States. So definitely he wants to continue to look at the data, and definitely he's at the receiving ends of President Trump's comment every single week, suggesting that he should cut interest rates like yesterday. Okay, so again, both are in opposite position right now. So it's a matter of time. The market will have to decide whether there is going to be any serious talk of a rate cut even this year. Market expectation is that most likely in June and in July, as well as in September, the odds of the Federal Reserve cutting interest rate is not very, very high. Maybe towards the last quarter of the year, we will have to see. So from now, we are in the second quarter to the last quarter of the year. There is a gap of at least 6 months. So nobody knows whether the Federal Reserve will act. Okay, so if the numbers come in over the next few months is showing that inflation is reigniting, then definitely there will be no scope for the Federal Reserve to cut interest rates. However, we've been seeing the dollar has been coming down very aggressively since Inauguration Day on January 20th. And this is maybe another way to play the same game. At the end of the day, the reason why Trump wants a lower interest rates is basically to make sure it is affordable for the United States Treasury to refinance the $9.2 trillion worth of maturing short-term in treasuries. And if you cannot get interest rate to come down, at least you can get dollar to come down. Okay, if the dollar come down, it means all the other corresponding currencies has actually appreciate. And last week we talked about how Asian currencies has actually appreciate very, very sharply, from Singapore dollars to Malaysian ringgit to Vietnamese dong to Taiwanese New Taiwan dollar, and even the Korean won has all appreciate very, very sharply. And this will have the net impact as getting the interest rates down. But again, Trump will prefer the interest rate to come down rather than the dollar come down the way it did. Although that was also one of his goals, is to get the dollar to come down. Okay, so what we are seeing here is a stealthy Plaza Accord like policy here. Okay, although it wasn't announced, but it has the same impact to get all other currency to appreciate relative to the dollar. And this was exactly what happened during the Plaza Accord back in 1985. And of course, we all knew by now Japan has been at the receiving end of that Plaza Accord, whereby Japan economy lost 3 decades of growth. Okay, so maybe this is the same game package, very stealthily without being accompanied by any formal announcement. Okay, so we have to watch these dollar movements. Then remember, shortly after Liberation Day, Trump announced a 90 days pause on all nations that has not struck a deal with the United States. Now, he has already expanded more than 30 days of the 90 days pause. So for the remaining less than 60 days of that promise to pause the implementation of the very punitive reciprocal tariff on all nations, Trump just announced on Friday that he is looking to set the tariff rates for all countries. So whatever he mentioned about a 90 days pause, meaning to say that in the 90 days in between, okay, countries are expected to approach the United States to negotiate. Some have negotiated, although nothing has been signed other than the UK. Now he's saying that he's not going to wait for them. He's going to impose what he believes to be the appropriate tariff on all nations. So now it is a bit of him, flip-flopping again. While he commits to give the rest of the world 90 days to come back to the United States to negotiate. Now, I think he's simply saying that I have no time and I don't have the capacity to negotiate with the rest of the world. I'm just going to simply put a rate which I think is the appropriate tariff. So this is going to be inflationary, definitely for sure. Okay, so he's using the tariff as a threat to make it almost impossible to sell into the United States. So that will trigger a global recession. Mind you, in the months ahead, before 2025 is out, we definitely will see a marked decline in global economic activity. And a lot of that can be traced back to this policy. Okay. So before Wall Street closed on Friday, Moody's out of nowhere announced that they're going to downgrade US credit rating by 1 notch. Okay. And this represents the last of the three major credit rating agencies in the States. We have S&P 500, we have Fitch, and now Moody's has downgraded US credit rating. So back in 2011, you know that the S&P 500 has actually downgraded the US credit rating, and the CEO of S&P Global did not manage to keep his job. Okay, he was pressured to leave, to resign. And that was followed by Fitch in 2023, which is only last year, or the year before last. Okay. And now Moody is looking at the numbers and at the rate in which the US has been chalking up the national debt. Now they has become the last to also bring down the credit rating. The market will react tomorrow when it opens. So it will be more or less negative. So we will have to watch how market reacts. Whether the goodwill that we've seen from all these good feel-good feeling about Donald Trump's successful trip to the Middle East and managed to garner almost $2 trillion in commitment to invest in the United States. Will it be undone by this unexpected move by Moody's to cut their credit rating? So we will have to see tomorrow. And tomorrow, Asia, we will have to watch how the Asian market reacts, and then followed by how the US session reacts, okay, on this particular news. Now, this week we have a bit of movements. We can see that the Monday was very, very good for equity markets, and this was largely in reaction to the US-China agreement to cut each other's tariff by 115%. So Monday was exceptional. Market reacted very, very positively, and then as the weeks develops, you can see that the excitement came down. Okay, so we can see that by and large, Wall Street has actually registered a very positive week to the point whereby all the index, the major equity index, the Dow Jones, the S&P 500, and the Nasdaq has all registered year-to-date gain. So we are back into the blacks as far as equity market is concerned, based on the closing price of December 31st, 2024. So year-to-date, all US major equity index has turned positive this past week. Now, for the other assets, we can see that the dollar has somewhat of a mixed reaction. It was a bump up on Monday, and then it went into flatlining for the rest of the week. Okay. Then we have the US Treasury, which is a 10 years Treasury bonds. It was relatively flattish, more or less the same as what it was the week before. Then we have big movement in gold. We can see gold as a result of that risk-on attitude by investors. We can see equity prices has rebounded strongly, and that has been correspondingly negative for precious metals like gold. You can see gold actually went down by almost 3.5% in reaction to the US-China agreement. Okay, and then for the rest of the week, we can see the market has actually quite volatile. One day of positive, one day of negative, before it closed negative for the week. Okay, so like I said earlier on, from the month high of $344.20 to as low as $3,123.30 per ounce as far as COMEX gold is concerned. So you can see gold prices continue to react. Although there was a very sharp, somewhat relatively sharp rebound on Thursday, okay? But then again, Friday saw those advantage being erased by the same magnitude. Thursday, we saw gold prices increased by 1.2%. By Friday, it went back down to negative 1.22%. So it basically went flat. Okay, so net, we have gold prices in negative. Then the other major reaction is in gold, is in oil. You can see that on Tuesday, we have a bump up in the WTI crude oil. We can see the market went up to almost 2.8% on Tuesday before losing back the same, almost the same amount of 2.4% by Thursday, although on Friday, it managed to fall back 1%. So we have a bit of a movement in energy markets, and the sentiment is that if the US and China, being the two largest economy, is able to de-escalate, that will mean there should be some kind of demand for oil. Okay, so this is based on sentiment so far. Okay. Now, the major economic data that was released this past week has been the CPI numbers. Now, on the chart on the left, which is the month-over-month number, we can see that there was a big climb down in the CPI numbers from January to March. Then it was back up again. As far as we can see in April, we see CPI numbers bump back up to from negative 0.1 to positive 0.2. So there was a swing of 0.3% on a month-over-month basis. Now the core number, which is represented by the red line on the chart to the left, we can see that that also picked up to 0.2%. Now, as we look into the longer period, which is the year-over-year impact on the CPI, we can see that the black color line to the chart on the right, okay, continue to see the CPI numbers continue to dip from 2.4 to 2.3%. This represents disinflation, not so much as inflation coming down, but we are going to see the character of why the CPI year-over-year is coming down from 2.4 to 2.3%. Does it suggest that consumers in the States are tightening their belt and they are not spending? Okay, if that's the case, that will be problematic because that will lead to a disinflation first, followed by a a possibility of a deflation going into the months ahead. Now, the core CPI, which removed the impact of food and energy, has been flattish at 2.8%, which is within expectation. So the core CPI doesn't tell us a lot, but the headline numbers year over year does continue to show that prices are continue to slip. Okay, now we are very, very close to the target of 2%, which is what the Fed has been saying that it is their target. Okay, so on that front, that means that inflation has improved to the point whereby it is coming very close to the Federal Reserve target rate of 2%. So that should be celebrated. However, we need to know the reason why CPI numbers are coming down in a sense. Okay, is it due to consumers not spending, or they have decided that they are not sure what's going to happen uh, as a result of the tariff policy, and they are holding back expenditure? If that's the case, and that's the reason why CPI numbers has been coming down, that will be problematic. Okay, and we can see that consumer confidence is not very high. In fact, it has been coming down. So the PPI, which is the measuring of inflation at the wholesale level, okay, to me, this is a more sensitive index because before we look into the CPI, it will hit the producer first. So if producer input cost goes up, it shows that inflation is coming back up. Okay, but what we have here is that the core producer price index, meaning to say you have to remove the food and energy component, has come off quite a fair bit. Okay, almost a whole percentage point. March we saw the PPI numbers at 4%, and which is the highest we have seen since the whole of last year, and that has come back down relatively sharp, okay, to lower than September of last year, which is 3.1%. Of course, this is subject to revision. Now, talking about revision, we knew that the previous core PPI numbers was announced at 3.3%. That was revised significantly higher to 4%. So on that front, March has seen very high inflation. So for the month of April, it has mysteriously come down to 3.1%. Does it mean that US importers are not importing? Very possibly, okay? Because everybody knew what is going to happen going into April when President Trump announced his Liberation Day tariff policy. So there was that surge, okay, of imports. But once April comes in, everybody stopped importing. So that could be the reason why we can see that the PPI number has fallen relatively sharp in April. So again, we will have to continue to see this data in the months ahead, whether there is a trend, okay? But it's quite disarming to see that there was a very high revision from 3.3% to 4% for the month of March, okay? Could there be more than just the data? Is there something else that we do not know just yet? Okay, so retail sales has always been a bellwether to see how strong the U.S. economy is. Like I say, we have always knew the U.S. is a consumer economy. If the U.S. consumers stop spending, the GDP will shrink. Okay, so month on month, now this number is pretty volatile. Month on month, for the month of April, it only it hardly grew at all. Okay, it only grew by 0.1% relative to the March number of 1.4%. So there is a complete standstill at the retail sales front. Again, this is another picture of US consumer maybe tightening up their wallet and not spending. And if this is the case in the months ahead, that will be a problem. Remember, Q1 GDP is already in negative territory. Okay, so if Q2 comes in also at negative as a result of US consumer tightening their belt and not spending, that will mean that US has a very high likelihood to go into a technical recession by the end of Q2. Okay, so again, watch out the retail sales, look at the spending patterns. Now, the control group, of course, includes, the other stuff that has been taken out from the retail sales, and that has gone negative. This is even more worrying. If the control group, which is a smaller group of samples, okay, shows that US consumer has practically not spent Okay, from 0.4% in March to negative 0.2, that is a 0.6 swing. On top of that, we have a revision to the upside for March. Okay, there was a revised statistic from 0.4% to 0.5, very much in line to what we are seeing in the PPI, whereby going into April, there was a bit of a front loading of inventory. People are just stocking up, okay, ahead of the expected increase in price as a result of the tariff. 0.5% now has been revised downwards to negative, or not revised. The latest month of April saw retail sales practically tanked, okay, to negative territory of negative 0.1. So this is something to be worried about. And if you are looking at the macro economics, you can see that by and large, the sense that US consumer is actually slowing down is going to be the main theme going forward. Okay. Now, sentiment is another measure of whether US consumers are comfortable or whether they are confident about the future. And here, the consumer sentiment index has shown us is barely above 50, which is going to be the dividing line between being positive and fairly positive and downright depressed. Okay. 50.8 is the lowest we have seen since the beginning of last year. Remember, last year, for the first 4 months, the consumers sentiment index for the Michigan has been consistently above 75. Okay, so now we saw that consumer confidence has been in the 50s, and the latest number for the month of May is hovering just above 50, which is a reflection of the lack of confidence among US consumers, which will lead to less consumption and may lead to a somewhat negative GDP for Q2. Okay, so now we are only in May. It's going to be 2 more months before we know the Q2 GDP numbers. But by and large, we can see that US consumers are definitely concerned about the outlook for the economy and their job prospects. Okay, if they are not confident that they are going to be better off economically, the odds is that logically people will start to be more careful about their uh, expenditure, especially those impulsive purchases. Okay. Now, market reaction has largely been led by the feel-good reaction as a result of the very successful uh, 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 trip to the Middle East by President Trump. Okay, so the market has been buying up, and do understand that this is a Dow Jones, which is more or less a index for the money managers, the international money managers. We can see that Dow Jones has actually recovered quite a fair bit, okay, but it is the weakest link among the major equity index here. Okay, later on when we look at the other major equity index, yes, they have all rebounded from the low that we saw as a result of the 90-day pause on April the 7th onwards. Okay, but it is not as pronounced in the Dow as compared to, let's say, the Nasdaq. Okay, so here we have a rebound, but it's good. The thing is that whether it is sustainable. Are we beginning to see signs of slowing down, especially after Moody's announced the credit rating downgrade for the United States? So again, we want to watch how equity markets react tomorrow when the market opens in Asia. Okay. Now the S&P 500 has been more robust. Remember, this is a retail-oriented index. It also shows us the sentiments among retail investors. They are definitely more bullish as reflected by the climb in the S&P 500. From the low of 4,835 on April the 7th, we can see the rebound in the S&P 500 has been a lot more robust compared to the Dow Jones. Okay. Likewise, when we look into Nasdaq, the Nasdaq has been the best performer. Notice the year to date is already up 2% from a negative 26% at the low on April the 7th and 16,542. So this is a major reversal of fortune for the Nasdaq. Now, remember, accompanying President Trump on the Middle East trip has been the CEO of a lot of AI-related companies. NVIDIA, we have Elon Musk from XAI, we have AMD, and all these people has been accompanying Donald Trump, including OpenAI CEO. And Saudi Arabia has committed a big chunk, okay, of $600 billion, largely in the AI space. So this has been very, very positive for the company. So it was no surprise that the rebound in the Nasdaq has been a lot more pronounced compared to the S&P 500 and the Dow Jones. Okay, whether it is warranted, it's too early to say. Okay, whether it has enough strength to go to all-time high beyond 22,222 on February the 19th of this year remains to be seen. But it is a little bit of an incongruent. Is the Nasdaq running ahead of itself relative to the Dow Jones, which is the index for international money managers? Again, the Nasdaq 100 is a very retail-orientated index, predominantly populated by retail investors. Okay, so the S&P 500 and the Nasdaq 100 are very much retail orientated. Does it show us a pattern that while international money managers has not been too crazy about the rebound, retail investors is showing full on risk on? Okay, so will that change the picture, or will the retail investor be the last to get into the game? Okay, we will have to continue to monitor this. Now, gold has actually been pulling back. The high is $3,500 in the spot market. It actually went to test the $3,200. So we can see there has been almost a $300 swing from the all-time high to where it was this week itself. Thursday being the lowest price, although there was a significant rebound on Thursday. Later on, when we go to the chart itself, I can tell you why the market rebound on Thursday. Okay, that has been shown to you over the course of last week, where I did mention a price range in which I do expect some kind of reaction. Okay, so there was a reaction on Thursday within the price bracket. Okay, so we see that this pullback is a correction within a very, very pronounced bull market. So use this pullback here as an opportunity to actually re-establish a position if you have not already gone long, okay? Because this bull market in gold is so pronounced that this pullback, as deep as we have seen, okay, it has come down 9.4% from the high just this month alone. We are not even talking about an all-time high. So there is a more than a 10% decline in the price of gold, okay, from an all-time high, but that represents just a correction within this very, very pronounced bull market in gold. Okay, so I'm still very much in favor of adding long positions, or for those who have yet to participate in the gold prices, this pullback could presents an opportunity to do just that. Okay. Crude oil has also been reacting, but reacting to the upside. Now, we knew at the beginning of the month, okay, prices of crude oil has all declined largely on OPEC plus, meaning to say Saudi Arabia has been be at the forefront of trying to flood the market with more supplies of oil, okay, and that has resulted in WTI prices on crude oil has gone below $60 a barrel, and by the end of this past week, we can see that oil prices has bounced back to above $60. So does it represent a change in sentiment, or is this just a bounce within a very pronounced bear market? By and large, there's still no sign to conclusively conclude that oil prices have hit rock bottom. There is still the possibility that the low that we saw at the beginning of the month may be revisited again. Okay. Now, this past week, there was some news article that suggests that President Trump is looking at $40 to $50 per barrel oil. Okay. And if that's the case, it means to say that there may be a little bit more to the downside going forward. Now, the dollar has also rebounded. You can see that the low in the dollar index happens within the last week of April, and prices has since rebounded. But this is representing a rebound in a move since the beginning of the year. Okay, the dollar index hit 109.53. Okay, just after the new year, and it has been all the way downhill since the last week of April. So the rebound that we have been seeing for the last 3 weeks is just that, a rebound. Okay, there is no conclusion that the bottom is in place. There's every possibility the low may be revisited again. Okay, so going into next, Saturday, remember I did mention that there is going to be a talk that I'll be doing for Philip Nova in Singapore. This is a physical event, and if you're interested to come in and join in the event, there is a QR code here which I generated. You can just take a snapshot of this and register for this event. It's free, and it's going to happen in the morning of Saturday, this coming Saturday, and I'll be going back to Singapore. I'm currently in KL, and I will go back 2 days before the event, and hopefully I can see some of you. Okay. So this being the case, I want to move on to the chart. Okay. There's a couple of questions. I'm sorry I didn't see your question. Let me see. Davy Hong is asking, if dollar depreciating against all currency, isn't it devaluation and indirectly making the bond cheaper to buy for overseas investors? Uh, Yes, okay. But on the flip side, we have to understand. Last week, I think I did mention the impact on currency on nations that have seen their currency appreciate, principally all the Asian currency. You got to understand during the period where the dollar was strong before it pulls back the way it did this couple of weeks, we're beginning to see that uh, countries that have seen their currency appreciated relative to the dollar now has a situation in which they will have to deal with. Taiwan is a big example. Now, the Taiwan life insurers reinvest a lot of their unhedged position, okay, into US Treasury. So they do not only has exposure to US Treasuries, they also have exposure to the dollar. So now the dollar has come off where the Taiwan dollar has appreciated. It means the holdings of US Treasury has declined in value. So at some point, because most of these exposure are unhedged, for some reason, the life insurers in Taiwan did not bother to hedge their currency exposure. And that was in a lot of major articles been reporting that the Taiwanese life insurers are very exposed to the sharp decline in the dollar. Okay. And because the Taiwanese dollar now has appreciated relative to the US dollar by almost 9%. Okay. That means to say whatever yield that they have managed to earn by putting their excess fund into US Treasury now are in underwater situation. And if this continue for a little while longer, assuming the dollar continue to move down against all the other Asian currencies, principally against the Taiwan dollar, for example, there may come a situation in which they may have to be bailed out by the Taiwanese government. So yes, on the one hand, you got to understand there is always two sides to the same coin. Okay, the dollar comes down means the foreign exchange relative to the nations that have exchanged the currency into dollar to buy into US Treasury has seen unrealized loss. Okay, that will be something we want to watch. Okay, now Anonymous is asking, last week I mentioned that I expect gold to pull back further. And just now you commented that we should consider taking positions in gold. Does it mean that your opinion at current level can start to enter long position? Yes, I will be talking about that later on. Now, remember last week I did give you a range of prices in which I was looking at. If the price goes into the bracket and we did see a bounce, it may represent a bottom in place. Okay. So later on, when we go to the chart for gold, I will show you exactly those levels and why I say the way I say it. Okay, meaning to say that is there a possibility that we may see a temporary bottom in gold? Okay, I will answer this question when we go to the gold chart. Okay. Now, Jim is asking if oil continues to fall to $40 to $50 per barrel, do I think it reflects the investor lack of confidence in the economy? No, it's not directly linked to the confidence. Now, it all depends because there's a lot of mixed feeling about this tariff policy. Now, Trump is definitely rolling back, okay, the worst of his tariff policy. Against China, we are back to square one, okay, meaning to say, as far as China is concerned, the current tariff, a 90 days pause, okay, represents where tariff was before Liberation Day. But for the other nations where Trump say that he's going to set the rate, okay, before the 90 days pause is up, it could mean that he's going to arbitrarily impose a rate despite countries not going back to the United States for renegotiation for a lower tariff. Okay, and that could be inflationary. Even right now, the imports into China are Chinese import into US is subject to 30% tariff. And a while ago, I was reading some news article. Amazon says that they're going to pass on the increase in tariff to consumers. They are going to increase prices. So this will be inflationary. And this is also something that kept the Fed chairman awake at night because he's not sure how this tariff policy is going to pan out. Will it lead to a reignition of inflation in the States? If it does, there is absolutely no chance that he is going to cut rates. Okay. And oil prices is the only thing that has been keeping the inflation down. Oil prices has been declining for quite some time now. And if Trump's get what he wants of a $50 per barrel oil, it means that inflation for now, okay, is going to be dragged down by the oil prices. Will it goes to $40 to $50? Nobody know. Because at $40 to $50, a lot of US oil producer may not survive. Okay. Saudi, with their low cost of production, will probably survive because their highest end of their cost of production estimates is $10 per barrel. So they can take a lot of pain. Okay. But for the Russian, they do not have this luxury. The average cost of production, including tax and taxation, okay, amounts to above $50 per barrel. So the Russian do not have the luxury of allowing price of oil to go below $60 for any extended period of time. Okay, so we will have to watch this space here. Uh, if oil prices continue to stay down, then we probably will be able to see not a very sharp rise in inflation. However, if the current oil prices stays above $60 per barrel and then starting to go up to $70 per barrel, that is going to be something that will make the Federal Reserve Chairman move. Okay, he will not only not cut rates, he may even choose to hike rates. Okay, so we will have to see all this because there's so many moving parts here. Okay, so without much ado, let's go into the chart itself. Where's my chart? Hang on, I got to unshare this and come back to you because my chart is missing from my screen. Okay, let me unshare this for a while and come back to you with the chart. Here we go. Let me know if you can see my chart. If you can, let me know, please, so I know that you can see my chart. Can you type yes if you can see my chart? Thank you, very good. Thank you very much. I mean, thank you very much, Wong. All right, we will start as usual with the Dow Jones. Now, remember earlier on, I showed you the close on close chart for the Dow. Now, this is the monthly time frame. The monthly time frame last month, we have a very strong reversal pattern here. Okay, the low was 36,000, almost 500, and we see a very sharp rebound. And this month, we are only into the second week of trading. We have seen that the closing price this past week has been above the opening price of the last week. Okay, so last month, I mean, so it has been a very positive development on the monthly time frame. Now, it is too early to say that the rebound, the pullback is over. It may well be over, okay? But I'm not sure how the Moody's downgrade of US credit rating is going to impact the market. Is it going to be like a dampener that will cause all this buy position to unravel going into Monday's trading? We will have to watch. By the end of tomorrow's night trading in New York, we should have an answer, okay? On the weekly time frame, you can see the rebound has been very, very persistent, okay? 4 weeks already consecutively. Okay, so it has been relatively strong on the Dow. So on the uh, overall, we can see that this corrective pattern from the high here at 45,153 is still considered part of that corrective pattern. If we do get a decline going forwards, a revisit of the low here at 36,500 remains a possibility. Okay, so again, we will have to see. Currently, the momentum is strong, okay, if we ignore the Moody's downgrade. But if the Moody's downgrade is going to be detrimental tomorrow, then of course everything could change in the jiff. So in the daily time frame, this is what we see. The market has hit a sensitive area. This is the three-wave equality bounce. The price was 42,283 to 43,331. The high traded last week on Friday was 42,674. So it is technically fulfilled its bare minimum rebound. So if the market comes back down, okay, look at how the market reacts on Thursday close. Thursday low was at 41,774. So if tomorrow or the next few days, this coming week, result in a close below this level, which is Thursday low at 41,774, that should raise some alarm bell. Okay. If we see that, perhaps we can take a chance, okay, to say that, okay, this rebound is over since it fulfilled its minimum rebound on at equality and is likely to resume its corrective pattern from 45,153, perhaps revisit this low here at 36,494. So there is the possibility, okay? So like I said, the Dow is the weakest link among the major equity index. If there's going to be a reversal, it may well happen in the Dow, okay? So when we look into the other index, which is the S&P 500, again, we want to refer to the monthly time frame. Monthly time frame is very, very strong, okay? From a low of 4,807, for example, market has rebound, and this is very, very strong rebound, okay? And you can see how the market closed at the end of this past week, and it is setting the stage for an assault to the all-time high. If there's going to be a possibility of a continuation of this bull market, okay, to erase the counter trend, prices must go beyond 6,150 and close above this by the end of this month. Okay, and this is based on the monthly time frame. On the weekly time frame, it's the same thing, right? On the weekly time frame, we do see a very strong rebound on Friday. Okay, and this market has already turned positive. There is the corrective pattern is already over. So this market here on a weekly time frame is poised, okay, to go back to take out the all-time high here at 6,149.87. So it has already turned positive on the weekly time frame for the S&P 500. So that put it in very strong contention that the downtrend that we see, okay, from the high of 6,150 is technically over as far as the S&P 500 weekly time frame is concerned. Here, to get further confirmation, we also saw that the daily time frame has also turned positive. So if you just look at the S&P 500, you'll be forgiven to conclude that the corrective pullback that we saw in February has already ended and is getting ready to reclaim the high. Okay, so do we see that in the Nasdaq? If we do see that in the Nasdaq, that will be another confirmation. However, when we look in the Nasdaq, yeah, the reversal has been very strong. Okay, so this is the Nikkei. I'm giving you the wrong one. Nasdaq here. Okay, here in the Nasdaq on the monthly time frame, as strong as the rebound has been since last month, the low of 16,330 thereabout has saw the market getting ready to challenge the all-time high at 22,254. If the market can close above this level by the end of this month, again, that will be the confirmation that the market has already finished with its correction and is getting ready to resume its bull market. Okay. In the lower time frame, in the weekly, we can see that the weekly time frame has already turned positive, and it is in very good company with the S&P 500 getting ready to reclaim the all-time high, perhaps going into fresh all-time high. So technically speaking, okay, other than the Dow, the S&P 500 and the National 100 are exhibiting momentum that suggests that a new high is coming, possibly. Okay. So as far as we can see, he has a return positive. So we should go with the medium to immediate term. Okay, they have all turned positive. The daily, the weekly has turned positive for both the Nasdaq and the S&P 500. So when we look into across Europe, take a look at Europe. Europe has also been very, very strong. We have a very sharp rebound from 7,531. And the agreement with the United States is actually creating a sentiment that is all good now. And FTSE 100 looks like it is poised to challenge the all-time high as 8,909.2. So this is based on the monthly time frame. Okay, if the market can take out this level at 8,909.2 and close above it, it will confirm that the corrective pattern that we saw from 8,909.2 to 7,531 is over. On the weekly time frame, we have not seen a full uh, uh, a full rebound beyond the invalidation point in the weekly time frame for the FTSE 100. That level is 8,744.5. If it is getting very, very close, because currently the market closed at just under 8,007. So just a little bit more, perhaps by Monday, if nothing untowards happen as a result of the Moody's downgrade, then perhaps this market is poised to take out this invalidation point at 8,745. And if that's the case, this will also eliminate the counter trend and setting the stage for a reclaim of the all-time high at 8,913. Daily time frame has not turned positive yet, but it is very, very close. Okay, the highest traded was 8,699 on Friday, and it's just what 50 points away from taking out this level at 8,744.5. So if it does, technically speaking, even the UK equity market is going to resume its bull market. It's going to resume its uptrend. And as far as the German is concerned, Germany has all turned positive. This is the DAX. It has turned positive on the monthly time frame. In fact, we have an all-time high, okay, this week, just under 24,000. So the DAX right now is perhaps the most bullish of all equity markets because it has reclaimed a new all-time high. So that being the case, the fundamentals are all the same. Yes, technically speaking, they have turned positive. Would this be the case? Okay. Yes, I think technically the momentum is suggesting that the correction that we saw for most of the index has practically been erased. Well, we still need confirmation this coming week. In the next few days, will be very, very crucial for the S&P 500 and the Nasdaq 100. Okay. In Asia, we are likely to see the same thing. Earlier on, you have a glimpse of the Nikkei 225. Nikkei, strong as it is, okay, we can see that the rebound was very, very sharp, but it is nowhere near the upper echelon. Okay, it still have a bit of room to go before it goes into all-time high. So on a monthly time frame, the Nikkei is still struggling, okay, because previously we knew the 40,000 has been mountain too high cross. You can see prices has traded beyond 40,000 in the early part of this year. In fact, in the middle of last year, but there was no closing above 40,000 in the Nikkei. Okay, so 40,000 on a close basis remains a barrier. On the weekly time frame, you can see that the market is still in a corrective mode, and the way the market closed on this past week is quite telling because it closed as a doji. Meaning to say the high traded this past week at 38,774 is beginning to lose momentum. Will it be a situation in which it leads to a three-wave below 30,357? It's just possible, but so far there's no confirmation. I need to see a close below the previous week low, okay, which is at 36,564. If I get a close this week or the week after below 36,564, that will be my confirmation that the market has run out of steam and is getting ready to fall back. Okay. On the daily time frame, the fact that it has punched above a key resistance levels prices may come back and retest this previous resistance level, now become a support line. Okay, so again, it has turned positive on the daily time frame. So near term, we cannot say that the rally in the Nikkei is over, because there's a possibility this is just a pullback within this rally that we saw at 30,357. Okay, so watch how the Nikkei behave this coming days. I think most likely we will see further decline in the Nikkei. Okay, and we want to see what reaction we get. If we do get a close, okay, below this line here, okay, which is a sloping line, okay, meaning to say that it will get progressively lower. But if you get a close on a day-to-day basis, then that could be the first clue that the market has run out of momentum to the upside. Okay, right. There's a couple of questions here that I might want to address. Anonymous, okay, good. Dennis is asking, are we still expecting something to happen next week? I am still watching the news. Okay. What happened is that over the weekend, there's supposed to be a peace talk, a direct peace talk between Ukraine and Russia. That did not end well. Okay. Because the principal player never showed up. So does that mean that the situation in Ukraine is going to escalate? Very likely, because now we have NATO proposing new sanctions on Russia. Okay. And eventually that will lead to some kind of, if the Russian president, decided that there is no way to talk peace, then he may actually want to escalate the situation. In the Middle East, something happened over the last few days that it has caused me to sit up. Okay. Now, China has never intervened directly in the Middle East. Now, the war in Gaza has been ongoing for more than a year now. And the latest report is that Israel has been bombarding the Gaza area again. Okay. And there's a subtle change in the way the US is treating Israel. Donald Trump went to Middle East to talk to Saudi, to the UAE, to Qatar. Okay. Without informing Netanyahu, which is the Prime Minister of Israel. So there is a subtle change in the way they treat Israel. So will that allow the Israelis to decide that maybe they have to take matters into their own hand? The Israelis has always wanted to attack Iran. Will the situation there escalate? First, with Gaza, China now says that the Israeli better stop doing what they are doing, failing which they may intervene or they may respond. China has sent a relief airdrop into the Gaza. Now, the entire airspace in the area has been locked up. The fact that a Chinese transport plane is able to punch through and drop relief supplies, okay, into Gaza, and has warned Israelis that if they somehow try to interrupt Chinese planes into Gaza, they will respond. So this is something very serious. And this is happening just this couple of days. Would that lead to a situation in which the situation in the Middle East and Ukraine will deteriorate? I think that is all the possibilities here. Okay, so whether that is going to be falling within the time frame between the week of May 19 onwards, we will have to watch the news. Honestly, nobody can tell whether something is preordained, okay? But the fact that all these noises has been coming in over the last few days, is causing me to sit up, especially the very strong language used by the Chinese on Israel, okay? So we will have to see, okay? Then as far as the subcontinent is concerned, the situation between Pakistan and India, okay? Right now, there is some sort of a truce, okay? But this truce is not very durable, okay? It could flare up again anytime, okay? Because right now, the Indian Navy has parked 2 aircraft carriers at the doorstep of Pakistan. Would the next phase of this conflict turn to a naval warfare? We do not know. Okay, but the fact that there are two aircraft, Indian aircraft carrier, at the doorstep of Pakistan, suggests that things are not necessarily going to come down anytime soon. Okay, we have to continue to watch all this. I think the situation will come from the geopolitical side. Okay. Anonymous is asking if equity markets come down next week, will BTC likely follow or will it behave more like gold? Now, BTC is very much like the go-to asset if there's going to be a little bit of chaos in financial markets. Okay, we have seen Bitcoin punch back above 105,000. So there is every conceivable reason to believe that the momentum that we are seeing in Bitcoin and all digital assets may actually continue. Now, don't forget, going into next week, the US Senate is going to decide to deliberate a bill called the Genius Act, in which they are going to approve the legislation for stablecoin. And if that is a positive development, meaning this legislation get passed at the Senate level, it may be a positive development. So going forward, again, you want to watch how Senate vote on this stablecoin bill. A successful passing of this bill is definitely going to underpin the digital asset space and by extension into Bitcoin. Okay, so do watch out all this development as it unfolds in the coming days. Okay, so I want to show you Hong Kong. Okay, Hong Kong has not been as positive. Okay, so here we have the monthly time frame for the Hang Seng Index. Yes, the rebound was pretty sharp, but it is nowhere near challenging the all-time high. I mean, the most recent high. Okay, this high here was actually achieved in what, January of 2021, 31,082.2. We are a long way from that because we only have so far a corrective rebound hitting the equality target of 24,782. Okay, this three-way bounce suggests that technically this is the bare minimum that a market can rebound to. And the fact that it has been kept at this equality level followed by 2 months of pullback suggests that there is a lot of technical trading here. People who have bought the rebound have possibly exited the trade here. Okay, so again, the US-China agreement to pause tariff for 90 days has not been particularly bullish for Chinese equity markets. At least we don't see it in Hong Kong equity markets. Okay, because Hong Kong is fighting a different battle this time. The Hong Kong dollars is at risk of being, the peg is, they will have to defend the peg. The US dollars, Hong Kong dollars peg has to be defended. Okay, so the Hong Kong authority right now will have their hands full, okay, just to defend the peg. So their attention is definitely not on equity right now, okay. They have to continue to sell the Hong Kong dollars in the open market just to maintain the peg, okay. So in the weekly time frame, the rebound has closed this gap here that was opened up, okay, 6 weeks ago. Now it has fully covered up, and if things continue at the present momentum, there's a possibility that the high here at 24,900 may be challenged one more time. Again, so far, by and large, this is a three-way bounce. You can see this three-way very clearly. Okay, so we need a close well above 24,900 to say that there is a new pattern forming. Okay, right now, I have to assume that the high here may actually hold. Okay, 24,901 may actually hold. So in the daily time frame, where the price is right now is quite interesting. Okay, if we have a close below this low here, this low is 23,046.3. So in the coming days, if we have a close below 23,046, it may set the stage for lower prices. Okay, because we are now at the space whereby I would consider to be very deep retracements of this rebound from 19,000. The risk reward ratio is actually superior if we engage the market on the short side. Okay, if we take a short here and place a stop above 23,900, for example, the risk reward is actually quite superior. All I need is for the market to challenge this 19,000 one more time. And if that's the case, that may result in a larger degree three-way. Okay, which may target the lower end at 16,500. Massive. Okay, if I do see this, we may be looking at possibly a resumption of the pullback from 24,900 all the way to 17,900 to 16,500. So if this market closed below this low point here, 23,046, it may set the stage for lower prices targeting at least 17,900. Okay, right. So this is my thought on the Hang Seng, more bearish than bullish. Let me see if you have any question for me. Okay, there's no new question. I will move on. Now I will talk a little bit about the dollar. The dollar index. Now this is the weekly time frame. We see a bit of a rebound for the dollar index. Okay, and we are going into a new week on May 19. Now May 19, okay, is going to be interesting. Okay, if everything that I mentioned in the geopolitical space erupt, it may lead to an explosion in the dollar. Okay, is it to the upside or to the downside? If I measure this as a three wave, it favors continual losses to at least 94 in the dollar index. Okay. We have 3 weeks of bounce. If nothing happens, the dollar will continue to trade downside, take out the 97 that we saw 4 weeks ago, and perhaps gradually goes below 75, 95. Okay, that would be the ideal ABC move. Equality is at 94.47. Okay, that will be ideal. And then from here onwards, we look for levels to buy the dollar. Okay, so if this happens within the week itself, before the weekend, if the price hit this level and there is a reversal pattern anywhere between, let's say, for example, at 90.8 to 94.47, then that will be my cue to buy the dollar again, because you would have completed technically a three-wave corrective pullback. So on the daily time frame, you can see this is the daily time frame, and it all calls for another low. Okay, 1, 2, 3, 4, 5, targeting 95. So technically speaking, I think it still favors more losses in the dollar. And if I draw a simple support line here, a close below this support line here on the daily time frame, could be my first confirmation that the market is going to re-challenge the 97.67 low. Okay. So technically, I do suspect that there is possibly that 1, 2, 3, 4, 5 scenario. Whether that's be the case, we will have to see. Yeah. So as far as the other major currency pair is concerned, it will be the mirror image. On the monthly time frame, while I was expecting to see a ABC move to the downside with a continuation to the downside in the dollar index, I do see a corresponding rebound in the euro versus the dollar, targeting 1.19. Okay, completing an ABC move. Equality move here is 1.19. And in the weekly time frame, this larger degree rebound, ABC move, ABC, okay, is going to be here. That level is at 1.19 as well. Larger degree bounce. Okay. So yes, this is my outlook, very much a mirror image of the outlook for the dollar. In sterling is a little bit more complex. Okay. We may see this market continue to grind higher. Now, if the euro dollar want to challenge 1.19, there's scope for the sterling to challenge 1.42 half, which is the previous high here. Okay, so this two level here at 1.4375 to 1.42, let's say 60, for example, is going to be acting like a magnet, okay, for prices to gravitate toward these two level. And whether it can sustain remains to be seen. But however, if the ABC scenario worked out in the euro dollar, we may see the resumption of the long-term bear market in the currencies. Okay, meaning to say, once this market reach key levels, and if it cannot sustain and the reversal pattern appears, okay, then I am leaning towards the resumption of the long-term bear market in currencies, and corresponding speaking, the resumption of the bull market in the dollar. Okay. So this is the weekly time frame. It's continuing to struggle higher. I think near term, the momentum suggests we may see higher prices, at least up to 1.42 half levels. Okay. Okay. Now, the other currency like the dollar versus the yen. So this is the monthly time frame. Market continues to unfold as a three wave, although this three wave is, in my opinion, still unfolding. Okay. If we get a three wave in the dollar versus the yen, it should look symmetrically something like this. Okay. Something to challenge the most recent low here at 139 half to as low as 136.50. And that will be symmetrical. Equality move 136 half. Continue to monitor this because I think the corrective pattern from 162 in the monthly time frame is still unfolding. It's not over just yet. So in the weekly time frame, similarly, we have this larger degree tree, this more pronounced three wave from near 162. So the target here is 136.65. Okay, and that will be very neat. Okay, very symmetrical. So near term, I still think we may see some near term weakness in the dollar, but as the dollar index completes its three wave, a five wave move, there is the vulnerability whereby it will start to rebound very strongly. Hopefully before the end of by the end of this week. Okay. So going into this coming week, as the dollar continues to weaken, uh, it may be a continuation, but again, be very careful as it breaks into the most recent low. Okay. So this is the daily time frame. It does looks like the momentum is still very much in favor of further losses in the dollar versus the yen. At least in the medium term, a challenge of 139.90 is almost a given because the rebound has been three wave. Three wave means it's corrective, and the dominant cycle will suggest that prices is going to swing back down again to challenge the 139.90. Let's take a look at the Aussie. Now the Aussie has have a very strong rebound last month, but there was no follow through this month. So among the major currencies, the Aussie seems to be the weakling. Okay, there is no strong momentum to the upside. Okay, so that keep it in the least favored position. If I'm going to take a position in the major currencies, perhaps the Aussie dollars is not the best performing one to give me the chance. Yes, it has rebound, okay, but it needs to show more momentum to the upside. The first target will be the 69 cents, 69 and a half cents. Okay, whether it can do that remains to be seen. This is the daily time frame. Strong upward bounce, and the market has gone sideways. So if within this cycle here we did see a marginal pullback in the daily time frame, you'll notice that I keep on mentioning three waves because three wave is so common. If we have a move over the next few days to the downside to challenge the 63 cent, that could be the last move downwards. If the market can bounce from here, it will take out 65 cents and then extend higher using the higher time frame as a guide. Here we may see the momentum, okay, taking prices towards the 69 and a half cents. Okay. I know there are people here who trade Kiwi. I want to also briefly mention the Kiwi does looks a lot better than the Aussie. Okay, we have a double bottom here at 0.54 half levels thereabout. Okay, they have two legs here, and the fact that the price uh, last month has actually closed a lot higher than compared to the last 4 months before that is very positive development. So yes, this month so far, for 2 weeks, we see there's no follow through buying in the Kiwi dollars, but that could be a good thing, okay? Because it has not followed through just yet. It suggests that there is a possibility of a pullback in the near term, followed by an extended run beyond the most recent high at 0.6230. Okay. Again, the logical target to gravitate towards will be the 0.6380 levels. So if we have a pullback, so far it has been very corrective. If we have a pullback and then another close above 0.6230, that will set the stage for a shot towards the 0.6380. So we cannot see this very clearly. Perhaps you can see it in the lower time frame. So far in the daily time frame, it has been three wave. Okay, three wave again is a very common pattern that we see across all asset class, across all time frames. So whenever we see a three wave move, it's quite safe to say that it is once the pattern ends, it will resume to the upside. And for this instance, we can see on the day time frame, we have a three wave equality move. Okay, hit the lower end of the equality move at 0.5860. The low is 0.5846. This bar here is super strong. Okay, this suggests to me that if I'm going to do a speculative trade, I may want to trade on the long side of this, okay, by putting a stop just below the most recent low at 0.5845 there about. That could be a near-term play. I could take partial profit when it breaks 0.6230 and then keeping the rest for a more aggressive move towards 0.6380. If you look in the lower time frame, like the 4 hours, it's even clearer. This entire move here is actually very corrective. Does it has a chance uh, to start to rally from here onwards? Possibly, okay? Because on the 4 hours, you can see that there's a very strong upside move here. Or the market has pulled back almost completely, but this will set the stage for higher prices with the risk controlled below 0.5846. I think it's a very small risk to take. If I'm wrong, I get out, I try it again. Okay, but by and large, I think if you look at the weekly time frame, it does set the stage for the continuation of this rebound because we have very strong rally here, followed by 3 weeks of relatively speaking, very corrective pattern in the pullbacks. So that set the stage for lower dollar and higher major currency levels. Okay, so hopefully that has been useful. Let me take some question if there's going to be any. Looks like there's no new question being posed. Okay, we'll move on to commodities. Okay, like gold, for example. Now, gold is very interesting. On the Monday time frame, we don't see a lot. Okay, we all saw that the all-time high is $3,500 per ounce in the spot market. Okay, and I did make a note here that if we have a high in April, then it is possible that we may see a 2-month extended corrective pattern. Okay, so there is the possibility this thing is going to uh, trade sideways more to the downside in retracement of this all-time high, okay, for the next couple of weeks. But in the weekly time frame, what do I see? Weekly time frame, I did see a three-wave pullback. This is not evident very much in the weekly time frame. It does maintain that the corrective pattern is not necessarily over, okay? But as I go into the lower time frame, it becomes very interesting. Now, when I go into the daily time frame, it becomes very obvious that we have hit a pocket of prices that may actually cause this market to reverse. So here we have a three-wave pullback, hit equality at 3,140. The low is 3,120 and a bit more, okay? And then followed by a bounce. However, there is no trigger of a buy signal. I need prices to go beyond the high here at 3,257. If I get a close this week, or not this week, anytime this week in a day time frame, above 3,257, that will be the first clue that the market bottom is in place, at least for now. Now, this fulfills the bare minimum corrective pattern. Sometimes the market do a very simple corrective pattern and then resume its original trend, which is upside. Okay, so there's a possibility the low may be in place. However, having said that, this corrective pattern could unfold into something more complex. But for now, after this week's price action, it is already quite enough to suggest that it has already fulfilled its bare minimum requirement, a three-wave pullback at equality followed by a strong bounce. Okay, so we want to continue to watch. In the coming days, if I get a close above 3,257, that will be my clue that this pullback is over and the market is getting ready to resume its uptrend. So you got to watch the market as it unfolds. Huh? So this is my 4 hours. Three-wave pullback, hit equality, followed by very strong rally. Okay. So where it is right now may be suggesting the risk is actually at the lowest. If you want to do re-establishment of long position, that could be this week will be actually quite a good week to do so. Okay. With the understanding that the market do close below the most recent low here, then this corrective pattern is a little bit more complex. So in terms of timing, it's still possible for this corrective pattern to continue to unfold all the way for into June. Okay, but in the longer term, this market remains a buy. So it's lower to buy in my opinion. It's whether we're successful in buying at current levels and then resume its long-term uprun, or the market unfolds in a more complex corrective pattern. Like I said, minimum requirement has been fulfilled. Okay. All we need is confirmation that a trigger has been triggered, and I need the trigger to be at 3,257 on a close-to-close basis. So this is my outlook for gold. And for silver, the gold silver ratio is now above 102. Okay. Is there a possibility when it's on the upper end of the gold silver ratio, meaning say it takes more silver to buy the same amount of gold? Okay. And is it possible that we may go far beyond into the mid 100s for the ratio? Everything is possible. Right now, silver is underperforming, and on a monthly time frame, this is a three-wave bounce. And after a three-wave bounce, there is no very strong momentum to the upside. I need to see strong momentum to the upside. If not, this will be simply a rebound within a larger bear market. Okay, so if gold is not going to rally immediately, we may cause silvers to again trade sideways to the downside. On the silver, you can see that the three-wave bounce has been almost textbook. Three-wave equality at $28.44. It hit the low of $28.34, followed by a very strong bounce. But this strong bounce, very encouraging, but not strong enough. Okay, I need to see something stronger than this. Okay, I need to see a close above this high here, $34.22 on a weekly basis. Okay. Then on the lower time frame, like the week, like the daily, okay, the rebound has been very encouraging, but it has been followed by a three-wave pullback. Is there a possibility that three-wave pullback is over? May not necessarily be the case, huh? There is scope for a near-term pullback, maybe to as low as $31.20. Okay, this will be a three-wave. If the prices can produce a reversal pattern on the daily time frame in this bracket of prices between $30.73 to $31.21. That will be my cue to try again on the long side of the markets, because the overall trend suggests that we are looking at a much higher prices. Okay, in the bigger scheme of things, I think I've labeled this. So if this is the fourth wave, it suggests that our all-time high is coming. Not all-time high, a new high is coming. So if that is my belief, I want to stay on the long side of the markets. Try not to sell the precious metal because the market is in a very serious bull market. Okay, so don't try to game the market on the short side. Rather, allow this pullback as a chance to re-establish long position. That will be my player. Okay. All right, I finished the goal. Hopefully, I can see new question being posed. Let's read up here. No new question. Okay, then I will continue. Okay, we will go into oil. On the monthly time frame, you can see the oil market is still unfolding in a three wave, and this three wave does not look complete. The market has turned negative. So trade on. Is it too late to try to sell this oil market? I think it's a bit too late. Okay, so I'm not going to watch this market for a while. I'm not going to sell at current level. Although I think there's a possibility technically speaking, there's a possibility market will go sub $50 or even $40 because equality is somewhere between $16 and $31. That will be on surface a little bit unrealistic, but I have to go with the technical. Okay, technically, there's a possibility of price going deep into this bracket of prices. It may not be a durable dip. Okay, if we do see a very sharp drop for whatever reason into the lower 30s or even the 20s, okay, that could be a buying opportunity. Okay, so again, we have to watch. Long term, I'm very bullish on oil because I do expect the war that we are seeing in various hotspots is not over by any means. On the weekly time frame, we have a strong rebound, setting the stage for a double bottom here. So near term, there is a possibility we can see the bounce happening in crude oil. Okay, this is the daily time frame. If this is a three-wave bounce at the bare minimum to re-challenge the $64.70 with focus on $65.07 to $67.42. So even if we do see a bounce beyond the $64.70, it is a corrective bounce. If you are not already long, don't long. Okay. In fact, the money may not be in energy for the time being. Okay. Now we come to the last bit, which is the digital assets. Let's take a look at Bitcoin. Now, Bitcoin is showing sign of trying to reclaim the all-time high. So this week we saw prices challenging the 105, beyond the 105. Meaning say $105,816 was a high this past week. Okay, so this is very encouraging. We have a move down and a close which is very superior. So this is the second week in a row, second month in a row in which we have seen strong closing. Okay, although May is not over yet, but we can look at from the weekly, it is all positive now. The corrective pattern that we see from 109,000 down all the way down to 74,500 is practically over on the weekly time frame. This market is poised for higher prices. Okay, a new high, it is not unexpected. So this is how it looks like, very strong recovery. So I think for the time being, if you have already missed the buying in Bitcoin, we just have to let it go until the price comes to a more reasonable levels. The near-term support is within this cluster of prices. Okay, if I have to say if there's going to be any kind of pullback into this bracket of prices, this will be where I'll be looking to buy. Okay, this bracket of prices. That price is going to be based on 92,800 to the high of 95,600. The price can somehow pull back into this bracket. This will be the most obvious level. This is the rally-based rally. So there's a lot of support here. If price can somehow come back into this band of prices, look for a reversal signal somewhere within the band here and then go long. Okay. Yep, there is no cheap way to trade Bitcoin right now because prices has already reacted to the upside. Ethereum, Ethereum is a Johnny come lately. You know, it has not reacting positive to the upside only quite recently. Okay, last month we have a low at 1,384, and then followed by a sharp rebound this month. Okay, and on the weekly time frame, you can see that the rebound continues, and right now we have a doji, meaning to say that it has lost a bit of its momentum, but on a close basis, it remains positive. So we have a few more hours before the week is out. Okay. So we want to see how this thing closes, but I think it's going to be somewhere around here, and which does not give us any clue. It only suggests that the momentum we see to the upside has lost a bit of its steam. Okay. On the daily time frame, it's not so obvious. On the daily time frame, it does suggest that pullback is actually quite conducive for another run up. Okay, so it is not clear where the near-term support is. Perhaps you can go down to the 4 hours to see if there's going to be one. Yeah, a three-wave pullback will bring us back to 2,383 or 2,321, which is very, very close to the near-term swing low. Okay, anywhere between 2,270 to 2,407. This could be a good bracket to look for a reversal signal. If the price drop into this bracket of prices, and if a strong reversal signal happen, take it. Okay. And this is one of the more high risk trade. Okay. Right. Anything else you want to ask me before we end the session? XRP, great. We will look at XRP. So XRP, I'm going to show you the daily time frame because the historical pattern, the data is quite limited. So by and large, it is still corrective. Okay, we have the dominant trend being upside, very strong momentum to the upside. And then we see a pullback from $3.40 all the way down to $1.61. And this has been very corrective. You see, this move here is corrective. Nothing impulsive about this move here. Okay, so there's no clue that market is getting ready to blast off. No. Okay. In the lower time frame, I think there's possibility of lower prices going ahead. Okay, because yes, so far it is three-way, but this three ways is extended. It is beyond equality, suggesting that it may unfold as something quite different. Okay? I will use the 1.618 as a guide. If there's a case, there is a possibility of a challenge of the most recent low at $2.29. Anywhere between here. Okay. If that's the case, another low below $2.29 is quite possible. Anywhere between the bracket of $2.19 to $2.27 and a half could provide a temporary bottom. But now it looks like it may have already bottomed ahead of this target at $2.27. If this market continues in a three-wave pattern, look for another dip below here. So I suggest it's too early to go back into XRP. Okay, it does look like pattern-wise, we may see another dip below the $2.29 sometime in the near future because this is the 4 hours. Okay, what else can I tell you? Oh, there's a couple of new questions. Natural gas. Okay, natural gas is still locked within the overall downtrend. Okay, this major trend is suggesting to the downside. This rebound is there's no follow through. Okay, so this is the monthly time frame. The way it sold off last month actually damaged this chart here somewhat. Okay, in the weekly time frame, you can see that this is three wave. Okay, and this pullback is relatively sharp. So the way it end this past week suggests that we may see lower prices, at least to challenge the most recent low here at $3.04. So as the price go lower, we can extrapolate it. Are we going to be able to get a low risk trade setup in the near future? I think there is a possibility here. So if I do an equality move, forget about the 2%, I do the 1%, followed by the 236. So if this is going to be the outcome, $2.17 could be a good price. If the price goes in, yeah, $2, $2.17. If the price ever go into this bracket of price below $2.70, okay, I may take a calculated risk to go long on the appearance of a reversal signal around here, provided the low here at $1.92 is not taken out, then I will use this as a low risk trade setup to go long. Okay, I may not put my stop below here. I may put my stop all the way below here. Okay, so this will be more of a long-term positioning. If I do get a chance to buy natural gas in the mid $2.20 level, I think that will be a calculated risk. Okay, yeah, this is a three-wave move. Yeah, $2.18. That will be a very low risk trade setup. If you are not going to be able to stomach the risk all the way to the low, then put your stop just below here, $1.29, 92 cents, and trade it from the daily time frame perspective, anywhere here, your risk is only this much. Okay, $2.80, assuming that's your entry price. You put a stop at $1.92, for example. That's all you're going to risk. Very small risk if you're right. If you're wrong, then take a small hit here in exchange for the possibility the market is zooming back up above $4.90. Okay, right. If there's no further question, I will end my session here. Today is a bit long. Now, again, for those who wants to show up at the event at Philip Nova at their office at City Hall, do register for the event. I'm sure they will also accept uh, uh, registration at the entrance on the day itself. 9:30 is where we're going to start, okay, and we will end before lunch. Okay, guys, if there's nothing else, thank you for your time, and I shall see you next Sunday. Bye bye. Take care.